please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, let's straight away talk about individual stocks that are buzzing in trade. Jubilant Foodworks had a great run yesterday and it's followed it up with some more gains today, a rally of about 2.5% as we speak. Mangalam joins in with the details on their conference call as well as how brokerages have reacted. Mangalam?
Absolutely, Rima. You know, the stock reported a good set of numbers, cooled off from yesterday's high, but today again it has resumed its up move primarily on account of fairly optimistic commentary coming in from the management in the conference call yesterday. I was listening in and they said that so far they've been pretty selective in opening new stores. This year they opened just about 17 new Domino's, but going forward they are going to increase the pace of opening new stores. That is one thing that really stood out. Apart from that, they said that they will focus on increasing sales from existing stores and rationalizing the cost as well. So that's a positive for the future same-store sales growth. And finally, they reiterated the guidance of turning cash positive or breaking even in Dunkin' Donuts on an EBITDA level by the fourth quarter of FY19. Remember, Dunkin' Donuts losses were halved from 200 basis points drag on the EBITDA to about 100 basis points drag in this year. They had guided for 2-year time frame for the company to break even as far as Dunkin' Donuts is concerned. That is something that the brokerages have taken heart from. A couple of brokerages have written all through this morning, and we've seen EPS upgrades of anywhere between 6 to 9% to some like Axis Cap, even raising their EPS estimates by about 30% on Jubilant Foodworks. The numbers should flash for you. Most of the earnings upgrades or the price target upgrades have been to the tune of from 2,800 erstwhile to about 3,000 plus. In fact, if you take a look at Kotak, that one has risen its target price or raised its target price on Jubilant Food from 2,500 to about 3,000. They say that the company has managed a balance between value for money proposition and protected its margins as well. So let's hear out the management themselves from the earnings call yesterday.
They had been very rigorous and selective about opening of new stores in the year FY18. With steady growth in volume and sales, we are starting to increase our pace of opening new stores. We will also continue to make good efforts and focus on getting higher sales from existing stores. I also promised to reduce losses in Dunkin'. We did shut down our unprofitable stores and rationalize the cost. Our sales have continued to improve, resulting in reduction of our losses to half in FY18. We are working hard on the path of achieving break-even by the last quarter of FY19.
Okay, let's talk about the star on the Nifty, then Tata Motors. That, in fact, is up close to 3.5%. Sonia joins us to fill us in with the reason why it's up. Sonia.
Well, thanks a lot for that. You know, Jaguar Land Rover came out with its retail sales for the month of April. Now, the sales look good because of a very low base that we saw same time last year. The growth has come in at 11.8%. The management in their own admission says that same time last year there was huge taxation charges because of which the UK sales had fallen quite a bit. So because of the low base, the numbers are looking very good. The management commentary is actually quite cautious. They say that the demand continues to be weak, especially in places like UK and Europe, and that could affect their business going forward. But the numbers this time, JLR sales up by almost 11.9%, Jaguar sales up 8%, and Land Rover sales have gone up by about 13.6%. Now, the new models have done relatively well. So the Range Rover Velar, the Land Rover Discovery, and the new Jaguar E-Pace has done well. If you look at the breakup in terms of geographies, the Chinese market has been growing quite well over the last few months. This time around as well, the growth has come in at 28.9%. The surprise element was in the UK market. So over there, the growth has come in at 25.9%. But as I said, the management has said that that's because same time last year was a really, really weak month for them because of taxation issues. The overseas market is fine. North America has actually slowed down quite a bit, just about a 2.5% growth. So all in all, yes, the numbers are looking decent, but you must put it into context that same time last year was bad and the management commentary continues to be weak.
Okay, thank you very much, Sonia, for that. Let's move on. HPCL is down in trade after US withdraws from the 2015 Iran nuclear deal. We spoke to M.K. Surana, the CMD of HPCL, on the status of oil prices going ahead and the impact it will have on the company. Listen in.
The prices are not fundamentally sustainable at this level, and this level of prices is more because of the high amount of speculation and the geopolitical situation, also added by Venezuelan issue and instability in oil production in Libya. Strategic reserves which has been created, they do provide a little bit of cushion in between to store certain part of oil. In the earlier sanctions, India has devised certain mechanisms where the Iranian oil was coming to India, and there was some payment mechanism which was worked out. The European Union seemed to be more concerned about it because their bilateral trade with Iran has almost tripled now after 2015 or so. So they are definitely interested in having some sort of diplomatic solution to the whole thing.
Okay, that's the word from HPCL, but let's quickly cut across to Ronojoy Banerjee, who's currently in conversation with Pawan Goenka, the MD of Mahindra and Mahindra. Ron?
Well, thanks very much for that, Rima. Well, Pawan Goenka, thank you very much. Always a pleasure to speak with you. And, you know, it's fitting that my final interview is with you, sir. So thank you very much for taking time out. I know this is your silent period, so I will respect that, and I will specifically ask you questions more about the industry. But I am tempted to ask you, sir, because very recently, you know, Mahindra's overall market cap hit 1 lakh crore rupees. I mean, what do you ascribe that to? What is it that the investors are seeing in the company?
Well, let me start off by saying, Ronojoy, that we in India and in media would miss you. And I wish you all the best in whatever you decide to do. Now you start off on a note that perhaps for Mahindra Group is a very sort of matter of pride that we have crossed that milestone of 1 lakh crore for market cap. And it's very dangerous to try and guess what drives share price, and I never try and do that. But since you asked, let me kind of put it in perspective of what might be going on in the minds of shareholders or analysts. In the month of April, starting April 1st, our share price has gone up almost 15% plus, which of course is a very good growth for any stock price. I think what's happening is that the market is seeing how everything is coming together for Mahindra. Now, Mahindra share price is driven about 2/3 by auto tractor business, about 1/3 with all the investments we have in various group companies. And if I was to look at, like, first the group companies, say Tech Mahindra. Tech Mahindra share price is getting re-rated because of the fear that with what's happening in US, the IT industry will collapse is not there anymore. And a lot of new things that are happening in the IT industry, and Tech Mahindra is very much part of that. Look at Mahindra Finance, company is doing great. Everything is working for them. They have had very good profits that they have announced. So again, that's helping our share price. Some new age businesses that we are getting into, which will become big business for us. For example, solar, doing extremely well. We're getting a lot of good contracts and positioning ourselves very well. Again, that's helping.
Right.
If I come now to the Mahindra and Mahindra operating side, the tractor business, automotive business, I think in tractor, finally, everything that we've been doing for the last 3-4 years is coming together. It's not just about market share in domestic tractor market, which of course we have done very well in, but I would put 4 buckets of things that we have done over the years. One is globalization. Our acquisitions that we did in Erkund, our acquisition in Mitsubishi, agriculture machinery, Sempo, our entry into Brazil, Mexico, all of this now are beginning to kind of become a sort of piece of the puzzle that's sort of making the puzzle complete. And we are really truly moving towards being a global player in tractor industry.
Right.
The domestic tractor business market share, it's a fairly good level on the back of some very good launches that we've done in the last 2 years. And we have almost like a new portfolio of tractors that we have. Precision farming, looking at future technology, driverless tractor that we have talked about, and the focus on mechanization. So if you look at it from being primarily a domestic tractor company, we are now becoming a really farm machinery global company, high technology, and market is perhaps seeing that that's going to bring us a lot of value. Automotive, first time in 5 years, I think.
So let's unpack some of these things. Yes, sir. Let's unpack some of these things, because you've mentioned, your tractor and automotive business. So let's talk about the auto business, because in the month of April, as far as passenger vehicles are concerned, all the big automakers, Tata Motors, M&M, Maruti, everybody reported a stellar, robust set of numbers. Is that an indication of what things, how FY19 is going to pan out? Maruti has already said double-digit growth forecast for this year. Is that something that you feel achievable? Because many would say that that if at all FY19 is a double-digit growth, it's going to be on the back of a higher base effect.
I think that going into FY19, we are perhaps in a pretty good shape compared to going into FY18. And the reason I say that is that one of the big disruptions that happened last year with the GST, where there was a lot of concerns on what GST might do to the industry, has stabilized very well. And therefore, there's nothing that I see in the next 12 months which will cause a disruption in the industry. I see no headwinds for the industry this year. There is a lot of demand. The rural demand will grow. The whole focus that we have, the infrastructure focus is going to bring demand for auto industry. And there are no worries right now of monsoon, for example, that's behind us because good monsoon has been predicted. Interest rates are not likely to become a derailer. Inflation is not likely to become a derailer, though there are some concerns, but not a major concern in terms of auto growth. The only thing that one worries about is commodity price, but I think we'll, end of the day, manage that also very well, like we have done in the past. And therefore, I really believe that going into FY19, we are in a better shape than what we have been as an industry for the last several years.
So then, sir, wear your Siam President's hat and give me a number. What is the ballpark figure that you're working with for the overall industry as far as passenger vehicle business is concerned?
Well, I'm not Siam President, so I cannot wear that hat, but I will talk as an industry person. I think double-digit growth for passenger vehicles should happen this year. Last year, we were at about 8% for passenger vehicle. This time, I am expecting to cross 10%. Subject to 3 or 4 things not becoming a derailer. Monsoon, as predicted, should be normal. Interest rate should not go up more than 25, say 50 basis point. Up to that point should not hurt the industry much. Commodity prices, we are looking at about 2% rise in commodity prices. If we remain about there, we are okay. Oil prices, 70, 75 is okay. If it goes beyond that, could become a problem. So basically, these are things that one has to watch for, provided none of these become derailers. I do see a very good possibility of more than 10% growth in the passenger vehicle side. On the commercial vehicle side, FY19 probably will be one of the best years that we have seen in a long time. And the reason for that is that industry has started recovering last year. There's still a lot of pent-up demand and that is happening, but the big factor will be that there is a concern about increase in prices of trucks and light commercial vehicles post BS6. And therefore, there will be a lot of replacement of fleet that will happen in FY19 and FY20, leading up to 1st April 2020. And therefore, I think there will be a very high growth. Don't be sort of fooled by April growth numbers, because that was something because of very low base last April because of BS4 coming in. But we would still see a growth higher than what we have seen last year, which itself was not a bad growth at all. We had about I think, 20% growth overall for commercial vehicle. And I think this year we would match that or maybe even exceed that.
Okay, that is Pawan Goenka saying that the industry should see double-digit growth in passenger vehicles, and for commercial vehicles, FY19 could be one of the best years on the back of pent-up demand ahead of BS6, which will come in FY20. So FY19 is going to be very strong for commercial vehicles. We'll get into a very short break on that note. When we return, we'll come back and focus on some more stocks that are buzzing in trade. Stay tuned.
Well, HEG posted a blockbuster set of numbers for the past quarter. We saw a strong surge in the operating profit margins as well. Did see a significant expansion, but the stock is at the high point of the day. As we spoke to Mr. Ravi Jhunjhunwala, the CMD of the company, he said that he's fairly confident about FY19 and he also expects utilization levels to spike up from here.
Our last quarter, we still had about 20 to 22% of sales which were done and those legacy orders. And going forward, this quarter and next quarter, it will be practically zero. It could be a couple of percentage here and there, but it is going to be practically zero now. So in the current quarter and the next couple of quarters, there'll be no legacy orders. So there'll be the price, average realization of our company is going to be higher than what we have seen in the last quarter. We have already done some debottlenecking in the last 2-3 months, and our capacity utilization in the last quarter was about 84%, whereas the whole year average was about 80%. And in the current year, we are expecting this to be in the high 80s. I would not say it would be 90, 92, but it will surely be in the high 80s, so which is going to be about 8, 9, 10% higher than current year.
Okay, Mangalam Organics is also buzzing in trade. Nigel, what's the update?
You know, yesterday, Rima, the buyback closed. That was on May 8th. So today, in fact, the stock is high with a gain of around 10% odd. Just to run you through the details, it seemed that the stock was forever at around the 230, 235 rupees odd, and the buyback price of around 230 rupees per share. That was putting a bit of a lid on the price. Remember, they were looking to buy back nearly around 6 lakh shares. The details are out on the BSE. Only around 45% did tender in their shares. So the total number of people coming in there to tender their shares was lower. And remember, this was a good buyback for retail if they believe that, in fact, that they wanted to tender in, because the promoters didn't participate. So the acceptance ratio would be even higher. The stock is higher. Basically, the buyback closed yesterday, so that was putting a lid. And even fundamentals have looked quite good for this year. For the 9 months, they've done an EPS of around 13 rupees. For the entire of last year, they did around 5 rupees. Just thought I'll spot that out for our viewers.
Okay, Mangalam Organics, big mover today. Blue Dart, on the other hand, has posted a muted set of Q4 earnings. Revenue growth has slowed down while margins have declined. Listen in to what Anil Gambhir, the CFO of the company, had to say about the outlook of the company.
This has an impact of these two big reforms. And going forward, things are getting stabilizing, and economy is going to grow, GDP is going to grow from 6.5 to maybe 7.5 in that range. Obviously, for that, the economic activity will increase, and that should reflect in our number as well.
Okay, here's a quick recap of all the buzzing stocks we just covered. We have Jubilant Food, Tata Motors, HPCL, HG, Mangalam Organics, as well as Blue Dart. We'll slip into a short break. Then on that note, you come back, we'll get chatting with the technical experts, Ashwini Gujral and Sandeep Agle.